Where is this sort of liquidity coming from? Is it likely to continue? Will it suddenly just disappear one day? Because somebody has to pay back, right? I mean, today, if the US government is like, see, our government cannot do that, we know that. But the US government is actually taking money and putting into the bank accounts of various people across their country, right? I mean, literally, people are every month getting, or every week, whatever that is, they're getting money in their bank accounts, right, for sustenance, for living, and that's like a stimulus that the U.S. Government is giving to its people, and of course institutions are getting it, banks are getting it. So there's like a huge amount of money. Where will the money go? It can't go to gold. It can't go to real estate. So obviously it can't go to the bond market because the money is made in stock market. So it will obviously go into the stock market all the time, right? So having said that, when it goes into the stock market, right? What then happens is that they will flood the world markets. So will it suddenly disappear? Are we going to have some major risk on the liquidity factor? Where is it coming from? Where will it continue? Will it dry off? Because if it dries off, we are going to be in a very, very serious situation. Profits down, market up, we might crash very badly. So this is like a fear that a lot of people have. So if you can address that a little bit.
Yeah, so I'll just start with the topic which you touched upon earlier. So you said that most of the companies' profits and revenues will be down this year. So if you typically value a company using a DCF or a discounted cash flow method, you typically discount the cash flows of the company for the next 20-25 years, and then you put a terminal value to it. So the first year or the next year's profit would have the least, proportion in the company's valuation, whereas the later years cash flows and the terminal value will have a major proportion in the company's valuation. So this year or the next year's profits would not have a huge impact on the valuation that you would typically pay for a company, and that's why you saw this huge rebound in May and June. So that's the basic thesis why markets rebounded. On the liquidity and the interest rate, so what has happened is that globally, if you see, about 60% of the bonds that are trading are below 1% kind of interest rates, and about 20% of them are in the negative territory. So what has happened is that almost all the reserve banks across the globe have been printing money. So this has been happening since the global financial crisis. They tried to unwind this sometime in 2016-17, and they tried to unwind this a little bit, but they were not successful in that. And then again, this COVID hit, and they started printing money again. So this is something, due to this, liquidity has been flush in the global markets, and given the interest rates where they are, people are finding less and less opportunities elsewhere apart from equities, and that's why the equity valuations have been up. Going ahead, I don't see this vanishing on any particular day. One day you wake up and all the liquidity will vanish or something like that. It will be a slow unwind. It will be a very, very slow unwind, and when and where it will happen, it is very difficult to tell right now. It will happen definitely sometime, but when will it happen is a question mark. So I don't see it coming in the near future, because globally the central banks don't have capacity right now to unwind. Most of the governments are running a fiscal deficit, and they don't have capacity to unwind this right now. So yes, liquidity has been a flush in the market. At the same time, the interest rates have been so low that people are not finding opportunities. So equity markets valuations will be elevated for some time in the near future.